Hey, welcome back. As you might know, I've been talking to experts from each area of the financial industry so I can get an idea of what the market is like and how they're able to help people right now. Today, we're going to talk about investments, and I'm really excited about this because I feel like it's something everybody's feeling right now. We all had our 401ks take a drop back in March, and it feels like it's been a roller coaster ever since then. So, I think talking with a professional can provide information and knowledge that will help us stay calm and weather the storm. Let's get started. Hey, Clay, thanks for joining me.
Hi, thanks for having me.
So let's just jump right in. This question feels a little loaded for an investment professional, but I'd like to get your idea of how the market is right now and what people should be thinking about when it comes to their investments.
Yeah, that's a good question. The market's been obviously it's taken a pretty wild ride this year with the pandemic happening. So there's been a lot of volatility, and a lot of uncertainty, I would say, with people thinking about their finances, thinking about their investments, because many people, part of their investment plan is, has some portion of their assets in the stock market. And the volatility, like I said, causes uncertainty and can, cause some people to make some pretty rash decisions sometimes. So really, when I'm talking to people and kind of helping them steer through these types of times, you just like to put everything in perspective. These downturns like this, when we look over the course of, the history of the U.S. and its economy and the stock market specifically, downturns are a normal thing. They're a typical thing that happens from time to time, and they're usually pretty short-lived, compared to the good times in the market, what we call a bull run. When things are doing well, the economy is getting better. Those times tend to last quite a bit longer than these downturns. So keeping perspective on that and kind of thinking about your long-term plan and keeping your plan in place. So I would say also, in times like this, be comfortable with your investments. Know what you're invested in, whether it's your 401k or your IRA, or whatever investment plan you have. You want to know what the risks are, what to expect with your investments, and with the amount of information that's out there now, it's a fairly easy thing to figure out. Some other things I like to, tell people, remind them of in these times, is don't try to time the market. It's been really volatile lately. It's really hard to get that right when you try to, you know, adjust your investment strategy during these times. So you're better off to know what plan you have, know your strategy, and then kind of stick to it throughout these times. Because many times, if you try to time the market during a downturn like this, you'll come out the other end of the downturn in even a worse position than you would have been if you would have kept your plan on track.
Mm.
Another thing is invest regularly during these times, and really always. So in our industry, we call that dollar cost averaging. So basic, and a lot of people do that without realizing what it's called. But a good example of that would be your 401k contributions. So maybe you have a percentage of your paycheck being set aside into your 401k, or maybe you're making contributions to an IRA, and you're putting money in a regular basis throughout time. So maybe $100 a month or whatever it is. That's an important part, because when you keep adding to a plan, think about this. So when times are good, maybe the security you're adding to this mutual fund or whatever is in your plan is $10 a share, right?
Okay.
So when I put in my $100, I'm buying 10 shares worth of that security. Well, now that we're in a downturn, maybe that's worth $5 a share. So now I get to buy 20 shares. So I'm buying double the amount of shares with the same money, with
Mm.
the same amount of money, the same deposit. So if you think about that, you're acquiring more shares during the downturn, and that can be very advantageous to people saving for future plans, future retirement. So that's an important part. So if you can still afford to keep adding to your plans as you were before, this is a crucial time to keep doing that, keep putting money into your plan, and get those good dollar cost averaging dollars in.
Hmm.
And lastly, I'd say for a lot of people, consider a hands-off approach during these volatile times, and just through, if you're not confident in changing your investment strategy or picking the choices within each type of plan, and many 401k plans and IRAs offer this type of investment. And a good example of that would be a target date fund.
Okay.
So that would be where you choose an investment option and you pick a date closest to when you plan to retire. Maybe it's 2040 or 2050 or whenever it may be. And then the investment itself, the mutual fund, is actually managing your risk for you and adjusting it over time to get less risky towards retirement. So that would be an example of a hands-off approach. And then, when it's kind of out of your hands, you can avoid making unnecessary changes and making a mistake with your investment choices.
Mm-hmm. Okay.
So those are the things that I'd like to highlight as far as how to think about your investments during this time and what to do and not to do.
That sounds really good. So it sounds like you're advocating that people don't react when the market gets volatile like this, but maybe dive deeper into like education if they are feeling antsy.
Yeah, I think it's a good time as good a time as any to review your plan and learn about what you're invested in. And a market downturn like this, for many people, should not cause you to change your investment strategy.
Yeah, that makes a lot of sense. Let's see, I have another question here. We may have covered this, but what would you say to someone that is concerned about their 401k right now?
Yeah, well, there's a couple things I wanted to talk about. We did cover most of it as far as where to get the information, sticking to your plan, making sure your investment choices are correct for you. But thinking about the 401k and especially people that are laid off right now, that's going to raise some extra concerns on top of the pandemic going on. So our government passed what's called the CARES Act earlier in March, actually. And that's doing several things for U.S. citizens, including I'll highlight basically what it's doing for and what the changes are for retirement account related things. So basically, part of that Relief Act allows people to, for one, withdraw out of their qualified retirement plan. And a qualified retirement plan would be like a 401k or a 403b or an IRA. Those would be examples of that. Without penalty, basically. So those are the exceptions they're making. Typically, there's a 10% penalty if you withdraw from your retirement accounts before you've reached the age 59 and a half. Well, they've said that if you withdraw during this calendar year, 2020, they'll waive the 10% penalty. And also they're giving tax relief in that because some of the funds may be taxable when you withdraw them based depending on what type of plan you're in. Mm-hmm. And they're also giving relief there by letting you pay the taxes over a 3-year span rather than paying them all of this year. And there's some other exclusions too. So you want to look into those details or get advice from a tax professional. But so that's the first thing. Also, 401k loans. So a lot of plans offer loans where you can take a loan from your 401k and pay it back over time. Mm-hmm. They've increased the loan limit from $50,000 to $100,000. Now you want to check with your plan administrator and see if you're eligible for that and possibly take advantage of that increase. So those are really the few main highlights that as far as regarding retirement plans. Obviously, there's plenty of other things in the CARES Act. But again, I would urge people, get advice from a tax professional. Mm-hmm. And if you're just wanting to do some reading and get some of the basic information, IRS.gov is a good place to start.
Clay, I wanted to ask you, how are you helping people right now during this pandemic? Do you have like a story you could share?
Sure. Yeah. It kind of goes back to the first question, just, talking with people, answering their questions, proactively getting them the information about the CARES Act and the changes for this year. And then just, helping them keep everything in perspective and reviewing their plans with them and make sure that they realize that they're still on track, even though this downturn occurred. And if they're not, then, reviewing their plan and making the necessary changes. A recent, interaction that comes to mind, I was speaking with a person and their company was affected by the pandemic, as a lot of companies were. And because of this, they were offering him an early retirement package. And he, didn't plan on retiring for a couple more years. And now he's faced with this decision. Should I retire now or wait? And when that decision came up for him, it was a lot of questions and a lot more uncertainty on top of everything else to say, do I have enough money to retire? What type of purchasing power do I have? So through, the first meeting, we were able to kind of I was able to answer those questions and start putting together a plan and really help them start realizing what their purchasing power was.
Mhm.
And, for him, fortunately, things are looking positive and he's able to retire and have a pretty secure income that's going to work for him and his budget. Obviously not everybody's that fortunate, but in this case, he was.
So when you say he's concerned about his purchasing power, what does that mean exactly?
Yeah, when you think about how much money you need to spend the rest of your life, it's a really tricky question, especially when you're working away, you're working a job, you have a salary, maybe some commissions or bonuses, something like that. And then all of a sudden you retire and those go away, right? And maybe you have some social security, maybe a pension. And then you have your retirement assets, your nest egg. And from that point forward, just the amount you spend matters a lot, obviously, because you want to make sure that you don't run out of money before you pass away, and you have the stream of income you need on a monthly basis to be able to, one, afford all your bills, and hopefully maintain your lifestyle that you've been living over the course of your life or improve it. So we're talking about purchasing power. It's just helping answer those questions. What will my income look like now in retirement on a monthly basis? And then what will it look like in 5 or 10 or 15 years? Because the cost of living keeps going up and your income needs to as well. So kind of having those conversations, doing those forecasts to say, here's what things could look like in 5 or 10 years based on history can be really eye-opening for people.
Yeah. Wow, that sounds like, I mean, we're in this really unique time, and it sounds like you're bringing a lot of calm and like looking into the future and being able to plan things out even when things are unique like they are right now.
Yeah, and you know what? Technology is a big factor in that. Having the software that we have now that can run forecasts and do things like that for people to help them see, this is how it could play out in different scenarios as far as your finances go.
Hmm.
And here's, your percentage chance of success, like, which is a big thing. What percentage of chance do I have to succeed in my financial plan? Meaning, retire when I want to retire, spend what I need to spend to be able to afford life, basically, and not run out of money. And we can do those forecasts now using technology, and just that and some sound advice can go a long way.
Yeah. Yeah, it really sounds like it. You gave us a lot of really great information, Clay. Is there anything that you wanted to end with?
I just tell people, again, this is a good opportunity. If you haven't in the past, get educated about your finances, about your investments, seek advice where you can. If this has affected you and you are in financial hardship, there are, again, back to the CARES Act, there are things in place to help you this year. So seek out that information, ask questions, and take control of your finances.
Oh, that's really great, Clay. Thank you for chatting with me today and passing on all this great information.
Absolutely. Thanks for having me.
Bye.
Bye.